When we talk about investing, especially in companies like Oklo, the first thing I want you to think about is the vision behind the business. Oklo isn't just pitching another energy project. They're presenting an entirely new way to think about nuclear power. Imagine compact reactors that don't take up the land footprint of massive power plants, that generate clean, carbon-free electricity, and that operate with far less waste than the nuclear facilities we're used to hearing about. That's the promise here. They're not only aiming to solve the problem of reliable, clean energy, they're trying to make it scalable and affordable for communities, data centers, and even entire cities. If this works, Oklo isn't just a company, it could be a cornerstone of the future energy grid. Man, that kind of vision is what gets investors excited, because it's not about where the company is today, but where it could be if the idea succeeds. Now let's talk about the financial potential. When you see a company working in a sector that's worth trillions of dollars, you have to stop and think about what even a fraction of that market share would mean. Energy isn't a niche market. It powers everything from homes to businesses to the digital infrastructure that runs the modern economy. If Oklo can bring their reactors to market, and if they can scale production, we're looking at a business model that could be incredibly lucrative. Think about it this way: even if Oklo secures a handful of long-term contracts, the recurring revenue from clean, low-cost electricity could be massive. And because this isn't a one-off product, but rather a long-term service, the compounding effect over time could create serious upside for early investors. That's why people see it as a potential, before it explodes, type of stock. Because if they execute, the growth curve could be steep. But here's the part most people overlook: the risks, and they're not small. Nuclear energy is one of the most heavily regulated industries on the planet. Getting approval takes years and sometimes decades. Technology that looks great in theory or in controlled environments can face massive challenges in the real world. And then there's the timeline. Energy projects are not overnight success stories. It could take years before Oklo sees meaningful revenue. And as an investor, that's a long time to sit on uncertainty. Investment, add to that the fact that Oklo is still unproven at scale, and you begin to see why this isn't a simple buy and get rich decision. It's a calculated risk, and it requires patience. So should you buy Oklo stock before it explodes? Investment. The honest answer is it depends on your risk tolerance. If you're looking for a safe, predictable return, this isn't it. But if you're comfortable with volatility, if you understand the possibility of losing money in the short term, and if you want to place a small speculative bet on a company that could genuinely change the world, then buying a few shares now might make sense. The key is to approach it responsibly. Don't overextend, don't gamble your entire portfolio, but recognize that sometimes the biggest opportunities come from being early. And if Oklo's vision becomes reality, being early could make all the difference. When we start looking at Oklo, the first thing that stands out is the vision behind what they're trying to build. This isn't just another startup pitching a new gadget or a software platform. Investment. This is a company that's aiming to fundamentally reshape how the world produces and consumes energy. And if you think about it, energy is the backbone of everything we do. Every business, every home, every industry depends on it. The problem is that most of the ways we produce energy today either rely on fossil fuels, which are expensive and damaging to the environment, or they rely on renewable sources like wind and solar, which, while promising, still face limitations when it comes to reliability and scalability. Oklo's vision is to change that equation entirely, and that's what makes this company so fascinating. What they're working on are small, compact nuclear reactors designed to produce clean, carbon-free electricity on a scale that's affordable and accessible. Traditional nuclear power plants are massive undertakings. They take decades to build, cost billions of dollars investment, and require huge amounts of land and infrastructure. Oklo is approaching the problem differently. Instead of building giant plants, they're creating smaller, modular reactors that can be deployed in places where traditional energy projects simply wouldn't make sense. Think about remote communities that don't have access to stable power, or data centers that need a constant, reliable source of energy. Oklo's reactors could fit into those markets seamlessly, delivering consistent power without the carbon footprint. The beauty of this vision is that it's not just about producing electricity, it's about rethinking the future of energy distribution. Imagine a world where cities aren't entirely dependent on massive grids vulnerable to outages, but instead can tap into localized, reliable sources of nuclear energy. Imagine industries that no longer have to compromise between cost and sustainability because the technology gives them both. That's the kind of future Oklo is pointing toward, and if they succeed, it won't just be another energy solution, it will be a paradigm shift. And that's where the opportunity lies. Because vision is what separates companies that make incremental progress from those that change the rules of the game. If Oklo's reactors work the way they're intended, investment. They could play a huge role in solving some of the biggest problems we face today, reducing emissions, cutting reliance on fossil fuels, and building energy infrastructure that's resilient enough to meet the needs of a growing world. Investment. That's not just a product, that's a movement. And when you're looking at a company with a vision this bold, it's easy to see why people are calling it a once in a generation opportunity. The reason this matters for you as an investor is simple: companies with visions this big are rare. And when they succeed, they don't just grow, they explode. When we shift from the vision to the financial potential of Oklo, that's where things start to get even more interesting. Energy isn't just another market. It's one of the largest, most essential industries on the planet. Everything runs on it. From the lights in your home to the servers powering the internet to the factories producing everyday goods. That means the demand for reliable and affordable electricity isn't going anywhere. And any company that can deliver it in a cleaner, investment cheaper, and more scalable way has a chance to capture massive value. Oklo is positioning itself right at the center of that opportunity, and that's why the financial upside here is worth paying attention to. Traditional nuclear plants take decades to build, cost billions, and require governments or huge corporations to back them financially. Oklo's smaller modular reactors flip that model upside down. By reducing the size, investment, lowering the upfront costs, and speeding up deployment, they make nuclear power accessible to markets that couldn't even consider it before. That includes data centers, which are growing at a staggering pace as artificial intelligence, cloud computing, and streaming demand more and more power. It includes remote communities where extending the grid is too expensive or unreliable. It includes industries that need steady, around-the-clock energy and can't afford to rely only on solar or wind. Each one of those markets is a revenue stream waiting to be tapped. And if Oklo secures even a small slice, the numbers could be significant. Now think about the structure of those deals. Energy contracts aren't short-term transactions. They're long-term commitments, often stretching out for decades. That creates stability and predictable cash flow for companies that win them. If Oklo is able to secure a handful of these contracts early on, the revenue they generate could fund further growth, expand production, and strengthen their ability to scale. And unlike a one-time product sale, energy is recurring by nature. Customers keep paying as long as they need power, which in today's world means essentially forever. That's the kind of business model that compounds over time and creates exponential growth if the technology delivers. The potential upside also comes from the timing. We're living in a period where governments, corporations, and consumers are under more pressure than ever to reduce emissions and shift towards sustainable solutions. Trillions of dollars are being allocated to green energy initiatives, and companies that can meet that demand are going to benefit from an environment that practically pushes capital toward them. If Oklo can position itself as a credible investment, scalable option in that landscape, the floodgates of investment and partnerships could open quickly. What makes this so compelling is that you're looking at an industry with enormous demand, a company with a disruptive model, investment, and the chance for recurring, compounding revenue streams. That combination is rare, and it's exactly why investors see the potential for something much larger than just another small energy startup. Now, as exciting as all of this sounds, we can't ignore the risks because they're very real, and they're often the difference between a groundbreaking idea and one that never truly gets off the ground. Nuclear energy is one of the most heavily regulated industries in the world. Every step forward requires approval from multiple agencies, and those approvals can take years, sometimes even decades. A single delay, a new set of rules, or a change in political climate can push timelines back indefinitely. That means even if the technology is sound, the road to actually deploying it at scale is filled with hurdles that have nothing to do with the engineering itself. As investors, it's important to recognize that no matter how promising a company's vision may be, execution in a space like this isn't guaranteed. There's also the technological risk. On paper, Oklo's reactors are designed to be safer, smaller, and more efficient than traditional nuclear plants. But until these systems are fully operational in real-world conditions, we don't truly know how they'll perform. History is filled with examples of innovations that looked perfect in controlled environments, but faced challenges once they had to deal with the complexities of everyday use. Nuclear energy, in particular, leaves very little room for error. Safety has to be absolute, and public perception is unforgiving. If anything goes wrong, even on a small scale, it could set the company back years or damage its reputation beyond repair. That's a level of risk that has to be factored in. Another concern is the timeline. Energy projects don't happen overnight. Even the most optimistic projections put meaningful revenue years into the future. For an investor, that means tying up capital in a company that might not show significant results for a long time. During that period, the stock can be incredibly volatile. News about delays, regulatory issues, investment, or setbacks in testing could cause sharp drops in price. And while volatility can sometimes create opportunity, it also increases the chances of panic selling or losses if you're not prepared for the long haul. Funding is another piece of the puzzle. Oklo is still a relatively small company, and scaling something as ambitious as nuclear energy requires massive amounts of capital. They'll likely need to raise funds multiple times, which could dilute early shareholders. And while partnerships and government backing are possible, they're not guaranteed. Without consistent funding, even the best ideas can stall. So when you look at Oklo, you can't just focus on the upside without weighing the downside. The risks are serious: regulatory challenges, technological uncertainties, long timelines, and the constant need for capital. These factors make it far from a safe bet investment, and that's why anyone considering investing has to be realistic about what they're getting into. This isn't the type of stock where you expect smooth sailing, and it's the kind where you brace yourself for turbulence and accept that things could take longer, cost more, and face more setbacks than you'd like. And that's why you have to see it for what it is: a high risk investment, high reward play where patience and resilience are just as important as belief in the vision. When it comes to making the investment decision, this is where the excitement of the opportunity meets the discipline of strategy. It's easy to get caught up in the possibility of being early on something revolutionary, but the reality is that every investment comes down to weighing risk against reward. On one side, and you have a company with the potential to reshape one of the largest industries in the world. On the other, you have uncertainty, volatility, and the very real chance that things don't play out as smoothly as the story suggests. Balancing those two sides is where good investors separate themselves from gamblers. The temptation with companies like Oklo is to go all in because the vision is so bold and the potential reward feels enormous. But that's not how smart investing works. You don't take your entire portfolio and bet it on one speculative idea, no matter how exciting it looks. Instead, you treat it as a piece of a broader strategy. If you believe in the long-term potential, you allocate a small portion of your portfolio that you're comfortable with, knowing that it could just as easily go to zero as it could multiply in value. That way, if things don't work out, your financial foundation is still secure. And if they do work out, even a small stake can make a meaningful difference. It's also important to recognize the role of timing. Stocks tied to emerging technologies often trade more on hype and anticipation than actual results in the early stages. That means prices can swing dramatically based on news headlines, government approvals, or speculation. Investment. If you're the kind of investor who panics when a stock drops 20 or 30% in a matter of weeks, this may not be the right move for you. But if you're able to hold through the noise and focus on the bigger picture, you give yourself the chance to benefit from the long-term outcome rather than short-term fluctuations. Another point to consider is diversification of risk. If you're already exposed to traditional energy or other speculative clean tech plays, adding Oklo could increase your exposure to the same types of risks. On the flip side, if your portfolio is mostly built on safer, more established companies, investment, having a small speculative bet like this could give you a shot at outsized returns without putting your entire portfolio at risk. The key is making sure this decision fits into your overall financial goals, not just reacting to the fear of missing out. At the end of the day, investing in Oklo comes down to your tolerance for risk and your belief in their ability to execute. If you're willing to accept the volatility and the possibility of setbacks, buying in early could put you ahead of the curve on a company that may change the way the world thinks about energy.